Hello, everybody. I'm Billy Abrams, CEO of ADM Securities, and this is the Weekly Digest. It's as we await the Fed's decision on Wednesday as to what they're going to do with interest rates. Most people think it's going to be raise them 75 basis points. I don't disagree. I do think it's possible they could go more than that. If they're ever going to do a 100 basis point rate cut, and that's rate hike, which is awfully large, this would be their chance. We're coming off a great jobs report 2 weeks ago. Questionable, much stronger than anyone thought. It's been followed up with several weeks of worse than expected jobless claims number, making that Bureau of Labor Statistics number maybe suspicious. But most of the economic news we've had in the last week has been strong. Not all of it, but most of it. Retail sales were stronger than expected. Even revisions to the previous months, upward revisions. So the main components of the economy show to still be strong. Housing market is still good, though it's come a long way and probably has to cool off a little. And inflation is still with us. As we move into Wednesday, we'll find out what the Fed does. I would remind everybody that the day before the last Fed meeting, we saw the 5-year print 360, the highest yield it has seen in years, at least 3. Since then, the 3 weeks that followed, the yield went from 360 to 275. Today, we're back in the low 3s. So I believe that it's a big trading range. I think that trading range could be with us for months. And I think most of the back and forth we see in the markets is a function of normal volatility within a big trading range. So I don't expect things to change too much. I think the upcoming weeks we'll probably see rates rise somewhat because we're closer to the low end of the range than the upper end. I think longer term, it's going to be a back and forth market. I would not doubt at all if a month from now we've seen another 340, 350 print in the 5-year, and I wouldn't doubt if it gets back under 3%. But I think the big picture is sideways for now. Ultimately, I think the 5-year could go a little bit higher than 360, but I see that as being down the road. We have seen crude oil soften, trade under 100. It's traded down to 87. It's in the 90s now. We've seen gold trade to its lowest level since COVID was at its worst. So it's a peculiar market. Most recently, though, I think the world is going to be focused on what the Fed does, and the Fed is focused on 2 things: inflation and job growth. And I think we're going to have to wait and see what they do. I think when we sit down next week, it'll be maybe a more interesting and enlightening conversation. Thank you very much. This has been the AD Weekly Digest, and hope to see you again next week.